Welcome and hello and hello and welcome. Welcome and hello and welcome. Welcome and hello and welcome, guys. Good afternoon. Bienvenidos. Happy Tuesday to everybody. Thank you for tuning in. It is an extremely special edition of Un Poco Mas, the show where we give you just a little bit more, guys. I'm feeling strong today. The market's looking very, very green. The only thing taking an absolute drubbing in my portfolio, of course, is NEO. It's got to be something. If I've got two testicles, somebody's going to be kicking me in at least one of them, and usually two. Anyway, guys, welcome and hello and welcome and hello. Thank you for joining me. I got to make this one quick because I have a ton of work to do today. I know you guys can't really read this because the resolution isn't high enough, but I just wanted to mention with SMCI, the two companies that I keep talking about, their filings came in this week. So that's Vanguard and BlackRock. Those are the two companies that I tend to follow into battle on sort of these longer term kind of swingish trades. Like, I wouldn't say, months, but for me, a swing trade can be like years. It's otherwise stocks for me are just mostly forever holds. I don't buy stuff and go, oh, I think this stock's going to be good for a year or two. I buy things that have long-term excellent management, business models, et cetera, et cetera. SMCI, I don't know if they're going to, dominate for years and years and years. Already, they're kind of, everybody's sort of catching up to them incrementally, but I think they're going to have a hell of a run for the next 5 years. But anyway, I just wanted to bring a couple things to your attention and then give one little opinion because people ask me, like, how do you find these stocks? How do you know when they're going to go up versus like when the downtrend is going to continue? And one of the things I look at is after the ER, they have these big pre-programmed falls. Like this, I'm going to go over an article, a really good article on Seeking Alpha that kind of shows how ridiculous this miss is and this big, huge, dramatic miss that, these articles were coming out with. It's just, they basically hit on everything and then, we're very close to meeting expectations on everything and then just crushed earnings. One sec, guys. Somebody's knocking. I'll be right back. Give me 2 seconds. Sorry about that, guys. Just the mail. In any case, so what I'm looking, that's not how a stock sells off. A stock will sell off in a miss like that. It'll sell off a little bit overnight. And then in the morning, there'll be kind of a wait and see, a response from them. Right? Won't just sell off from $60 to $45 all at once and then trade sideways on an algo hold for the next week. The moment if anything natural is going to happen, it's either going to continue to bleed, continue to sell off as people just give up, or it's going to do a dead cat bounce and recover, a certain percentage. It's like retracement the other way. That's kind of really what a dead cat bounce is in a sense, if you want to, simplify it down to an idiot language. But in any case, so Vanguard filed yesterday, 8/11, they filed their 13F. Vanguard increased their shares in Q2 by 2.71% to 66 million shares. So they have about as many shares as Uncle Chucky. And about as many shares as me. And then BlackRock decreased their shares by 2%, and they still have 40 million shares. And then Vanguard's average price is $41.94, and BlackRock's average price is $42.19. So they pretty much trade in lockstep. State Street, they didn't file yet, but they have the exact same average. Now, if you go down to some other critical filings that came out, there's not that many. Most people haven't filed yet. Most of these institutions, they have till the end of the month, I guess. But 13F from Schwab, Charles Schwab, is at their average is 41.88, and they increased their share count by 5.31%. They only have about 4 million shares, but they're another one that kind of trades in there. And like I said, last filing for Goldman was 627. This is this is this quarter's filing. I think they filed early. It's a 13FA. Not exactly sure what the difference is between a 13F and a 13FMA, but they're just different forms you have to file with, obviously, with the SEC, depending on your ownership, your structure, who you are. How you're registered, what different division is, all kinds of things that go into these filings. I can't claim to, be an expert on them. Not a CPA, certainly not a tax or securities attorney. I'm just a big dumb hammer swinger, big knuckle dragger, big dumb ape, big dumb smelly ape. But anyway, so Goldman, their last filing increase is just, you don't usually see this 179% increase to 3.6 million shares, but be that as it may, I just wanted to show you those filings. I can show you the short going back up. I can show you the cost to borrow remaining near zero, quite suspiciously. But you can see the trend in the filings. Again, I don't know if the resolution's high enough for you to see this, but the official report that just came out on August 10 that shows data through the end of July, they decreased the short by 2.58%. And then the period before that, they decreased it by 3.49%. And then, so like over these short reports that come out, the official reports, out of the last 6 reports, they've decreased the short 5 times. So the short interest kind of peaked right here around 23% on the data for the end of March. And ever since then, it's been going down. So it's down like 5%, which is very, very significant on a stock like this that's heavily shorted. And there's a lot of, it's not really pure short. There's a lot of like options plays on it and just different stuff, a lot of hedging, a lot of nonsense, a lot of shenanigans, a lot of buggery. Just a lot of stuff. Sorry, guys. It's like the second night in a row of getting like no sleep. I don't know what's going on. I'm not even drinking coffee, following not a lurker's orders. But another thing to look at, and this is what I'm talking about with the chart, basically falling artificially. And then you'd expect continuation to go down, but that's not what happens. The stock trades sideways. You've got a lot of buying and accumulation in there. So it's just not natural price action. Like you see this over and over again. You saw this with IOVA. They had a very small kind of negligible miss. I mean, it was an important miss because of runway and cash burn. All that. I'm not saying it wasn't important, but certainly wasn't the kind of thing where you expect the stock to drop, down to $1.70 or something, and then the stock immediately recovers back to 230, 240, and settles at 210. But SMCI, there was absolutely no bounce really at all. Like you saw the thing fall all the way to 45, and then 2 days later it actually closed below that and then traded sideways again. Then you got a bit of a bounce to 46, but it's an interesting number because it's the exact same place. If you look back, the stock was being algo held right before the Hindenburg drop that took the stock all the way down here into the 17 territory where, smart money was just loading up. Hindenburg and their hedge fund partners were covering. Retail investors were soiling themselves and jumping out windows, lighting their testicles on fire. But this thing has just been an absolute orchestrated scam from the jump. The pump and dumps are there. The algo holds are there. So when it falls off a cliff like that, obviously they're hitting all the stops, 55, 50, all the way to 45. They're stopping everybody out. So all those shares, they're picking, but they don't really want to, if they're taking it to 45, they don't necessarily want to buy your shares at 55 or 50. So they kind of bypass that. It's how price fixing works. They just place all the action at 45 on the bid and the ask, and they can overwhelm anything that's there. And it just kind of, you might not have even got filled if you were trying to, sell your shares at 55. Who knows? I mean, they probably had to buy them, but things are done. I've heard things are done. Anyway, AMC. I don't play with AMC. I don't have anything against it, but IOVA had an unusual pop. Haven't looked. I've been really busy, guys. Haven't really looked at stocks too much today. This is a great article, guys. If this just summarizes my thinking, Supermicro Computer AI champion priced for distress. KM Capital, he comes to a fair value on the stock. He estimates at $75, I think, with some fairly, conservative assumptions. And he's talking about the earnings call and what's important. He's like, okay, revenue, the consensus was 5.9. They were at 5.76. That's a difference of, 0.12%. And then, the EPS was, this isn't percentage. This is some kind of statistic. I'm sorry, I can't think. just due to a little bit of lack of sleep. Let's see, ADMA biologics. I'm not sure. I'll have to look that one up. Let's see. Too much. Yeah, what's going on? The great Nautilurker is just a little bit too busy for Unpoko Moss, and who could blame him? I've heard most executives are bald, actually. Most top executives, most top people. Jeff Bezos, Elon before the rather suspect hair plugs, which he got on Mars. That's why they look so great. I love these guys who think like, these billionaire guys think I have no problem if you want to get like a trophy wife or whatnot. People can do whatever they want. I mean, I'm not really a judgmental guy, but sometimes when they get the hair, they're just so full of themselves. It's like if I ever lost weight, I'm going to start in a weight loss show. It's where I lose money in the markets and lose weight from my fatties. LDI, Loan Depot. I've taken a look at Loan Depot before. I can't honestly remember, guys. I look at these stocks, and honestly, if I don't have an interest in owning them, I don't really follow them too. I'm just not somebody that can follow all the earnings reports and all the stock. I just don't have time. But here's the key, guys. Consensus was 29.79 billion for next year, and management said at least 33. So I'm sorry, these are just nominal numbers. What am I talking about? So that's, they're talking about 0.12, or that's 120 million, and that's 20 million, and this is 130 million, and then this is 3.21 billion. Like, what an idiot. I'm just subtracting. Like, is that a percentage? You guys didn't know. I'm really dumb. But so net income wasn't bad. Cash flow from operations was really good. And the years coming up look better and better and better. And they said something extremely important on this earnings call. They said they expect to grow large-scale data center customers from 4 in 2025 to 6 to 8 in 2026. So you can see how they're going to get that growth. And they already know what those projects are. They're bidding on them. They're in talks. I don't think they're wildly speculating. Now, I know they shouldn't have come out and said 40 billion. That was a horrible idea. You never say anything. Just never say anything. Just come out, let the earnings call, let the numbers talk, let the growth talk. And that's just another thing I wanted to, sort of touch on here, guys, is I think what's being glossed over is just how incredible the growth that we're seeing with this company is. Like, from 2023 to 2024, they more than double their top line sales. And this is not a company selling, 300 million or, $50 million. They're already selling 7 billion, and they double the top line in 1 year. The next year, they grow the top line at 50%, and everyone is horribly, horribly disappointed. On the trailing edge of a product cycle, stuck with a bunch of dead inventory by export policy that's changing almost by the day. And that's disappointing. All the while, they're still making money. All the while, they can't do anything because they're stuck with this, accounting scandal that isn't. And I can understand why people would think these numbers have to be so cooked and fake, because the growth looks just like, how could they be growing this fast? Why, if they're making money on these deals, why wouldn't Dell or HP or, one of these other companies that's so much better and so much bigger, why wouldn't Cisco? Why wouldn't Cisco just come in and take the business, or Lenovo? It's so easy to do what they do. It's just boxes, right? They're just selling, this year they're going to sell at least $33 billion worth of those boxes. And they're going to make money. And they only have about $5 billion in total debt. I mean, this company is not drowning in debt. They're making money. They can easily service their debt. Go back to this article. Just the valuation analysis, the estimated forward PE is 17.4, considering the rapid revenue growth and solid AI exposure. That's extremely low. Despite the pressure on margins the company faces, Wall Street analysts still expect solid EPS growth over the next 3 years. Estimated forward PE ratio for 2028 is an extremely low at 12. Now, Granted, 3 years out is quite speculative, but another obvious indication of undervaluation is SMCI's forward price to sales ratio of just 0.85. Such a low price to sales ratio is rarely seen, as it is usually associated with companies drowning in debt or operating in industries experiencing secular decline. Opposite with SMCI, not drowning in debt. They've just been able to, use a factor and sell their receivables at favorable terms. They've been able to raise money. The first money raised was a little bit sketchy before they got their books out and, got things together. But we didn't hear anything about the books in the CR. We didn't hear anything about the accountants being unhappy. And they basically said, we're not able to recognize revenues yet. That's why you got to wait a couple quarters for this, really strong growth to kick in. So their margins are thin and under pressure, but they remain profitable. Key metrics standing quite decently compared to the sector median. The capital structure is healthy with only $5 billion in total debt. Therefore, I'm sure we can expect the price to sales ratio to return to more adequate levels. The company's average trailing 12 months price sales ratio for the last 5 years, 1.36. If we multiply management's 2026 revenue guidance 33 by 1.36, fair value is estimated at $45 billion. With this information and the known number of shares outstanding, the fair value per share is easily figured out. And he goes through, and if you just put it at 1.36 sales and you multiply it out, the fair value is 75. And I think this is still the accounting scandal, all the smoke, all the bad, PR dragging the stock, and everybody's saying, Kramer keeps saying, Dell's taking their market share. They're not going to be able to gain market share, but they're still going to get the biggest accounts because they're the most cost effective. They're the best solution. They're the most density. They're the best with liquid cooling. And from what I've seen, nobody can really challenge that statement. They're really ahead of the game, technology-wise, in this arena. And I think I don't think anybody's going to take all their market share. They're saying, hey, we're going to keep getting 30 to 35% of this business on an ongoing basis. And I think they're going to take more market share because I think they're more innovative. And they're trying to make the experience better, faster for their customers. This building blocks that they're coming out with is going to have better margins. The margins are going to go up with the new cycle of Blackwell. It's exactly what happened last time. That's what management was talking about on the last earnings call. Nobody listened to them because they were just looking for the bankruptcy or somebody to slap the silver bracelets on them, march them off. A little Camp Fed action. But extremely cheap valuation. Technical setup is quite bullish. Stock became close to oversold levels after the post-earnings panic. RSI is currently below 40. Therefore, the technical setup suggests a sharp rebound is likely to happen. Of course, if they don't meet the expectations, all this is for naught, which could obviously happen. There could be more accounting difficulties. Wall Street analysts aren't that excited, but I don't believe these calls. SMCI remains massively undervalued. While its AI exposure is still rock solid, there are multiple indicators that tailwinds for AI stocks are likely to remain strong for longer. Therefore, my take is that SMCI is still a strong buy. I completely agree with that analysis. And, that's why I continue to hold my shares. Say I got out of some calls, but volume is pretty weak, actually. But you can see the algo wants to trade the stock sideways, but there's just a lot more buyers than sellers. I mean, that's the bottom line. And they ripped it all the way down below 45 to hit stop losses again. So they sold a lot of shares to get down here. This weird gap in the chart there sometimes is. But you see just a ton of buying coming in at the bottom. And then all day, all the big candles are green. So make of it what you will. They've always wanted to accumulate here at 45. They were doing so before the Hindenburg drop, a lot of people shorting there, of course, who knew what was going to happen. That non-inside knowledge. Wish I was smart enough to write a short report. Just manipulate the market and make a fortune. Laugh all the way to the bank. The expense of retail investors. It's not insider information. To me, it's material information because it's going to move the market and you know about it. Nobody else does. But if you write it, I guess you're really able to do that. Who's here, guys? Prop is tanking after hours. I'm not surprised. God. Another one. I wouldn't say it's tanking. Yeah, they're selling some shares, but this is, I wouldn't call that tanking. This is just where it started the day yesterday. This thing trades like this. No, don't worry about it. The earnings are today, so this is all rearranging the deck chairs. Look at what's interesting. I'll tell you something. If you look, I bet so many of these candles, guys, are green. Look at the candles. As this volume accelerates throughout the, or this is a year, sorry, I was looking at the day. Look at how many of the candles are actually green as you go through. Look all through here, these big green candles. This is the algo, these same levels of buying. It's all green. This is all accumulation. You think, oh, the stock, they can't be buying as the stock trades down. Absolutely they can. Now, yes, they're dumping here to drive it way, way down, but they're going to buy a bunch of shares at the bell. Watch. It's going to spike a little bit right at the bell. But yeah, it is definitely dropping. That's true. IOVA crashed, but I think the earnings report, I think the guidance is going to be really good. I think they have a lot of drilling that's going to come online in the last quarter. And I think things are going to look really, really good for next year. But, you know, what do I know? We'll know in about an hour. So, you know, the earnings call. Yeah, BlackRock just bought a ton of prop. I know that. I'll take a look. See here. Yeah. So, BlackRock just increased their, and I mentioned this yesterday, I believe they just increased. They filed yesterday, or no, they filed today. I'm sorry, it was Vanguard who had a huge increase yesterday. BlackRock just bought. Increased their shares by 247%. So they have 1.549 million shares. So they actually have a lot more shares than Vanguard now. So guys, I don't know. I didn't know these filings were going to come in when I recommended. I actually got this stock from a friend of mine, older guy, who's given me a lot of stock tips over the years that I'd never heard of. And the vast majority of them have panned out. Now, some of them haven't, but that's just the nature of the beast. You know, he's not clairvoyant. He's just very, very good. So I've done a lot of research on this now, all the rights they bought, and it's really good stuff. I mean, if they just execute and if they just drill and if the price of, you know, oil and gas doesn't crash, and like I said, they've hedged. So yeah, that's thanks. That's a great pickup. That's a great pickup, Stephen Wolf. Thank you very much. Yeah, because I mentioned the Vanguard filing yesterday, but I didn't realize BlackRock filed. I think BlackRock dumps all their filings on one day. So, and then Geode also. Geode's another big, huge trading house. They increased 76%. Their filing was on the 8th, but they increased 76% to 661,000 shares. So. Very, very significant. Very significant. Correct, David Massarelli. Maccarelli. I don't know. I can't speak no Italian. Ate a lot of Italian food, helping me retain my pleasantly plump figure, my pear shape. Anyway, guys, I got to see if I need to make any moves here in the last few minutes and see what's going on. I just haven't had a chance to look at my stocks too much today. But I think it's a hell of a buying opportunity. I mean, the stock is trading way under next year's sales. They're profitable, or this year's sales, current year. They don't have a lot of debt. I mean, even if they miss by a little bit, it's still, I mean, a company of this size growing at 50% is extraordinarily rare. It's extraordinarily rare. This company is a unicorn. Uncle Chucky is a unicorn. Uncle Chucky is a genius. And this is way better than Dell, HPE. This is almost a pure AI play right now. And those companies aren't. I don't care what the bald prophet says, and I don't care about the charitable trust. You guys can all go sit and spin. Guys, I appreciate it. Thanks for joining me. It's Un Poco Moss. My name is Cornbread or Mini Water or Danny Deals or Hurricane Lopez or Stock Karen or Stubby Cohiba or Stubby Macanudo or the Tugboat. Just depends what the voices in my head have going on, who's winning that tug of war. Anyway, guys, appreciate you joining me. It's Un Poco Moss. Thank you so much. I want to thank the great Nautilurker, even though he's working too hard to be here. I want to thank the great Alberto Berti Avalos and, of course, the greatest of the great, Princess J. Appreciate you. Un poco más. Peace.